We've all complained about the seemingly endless rate hike cycle and the pressure it puts on disposable income, but there is a silver lining. Higher interest rates are a boon for savers and investors. To talk more on this, we're joined by personal finance columnist and guru Maya Fisher-French. Maya, thanks again for joining us. Just in terms of how this benefit, it is of significant value to stretch your money if, of course, you find yourself on the positive income space rather than being in deficit. Good morning.
Good morning. Yes, absolutely. And I had a look. I thought, well, let me go and see what everyone complains, obviously, about the high interest rates, and we're writing about that. But, you know, there are a lot of people out there who are saving money. And how has these interest rates affected them? So I had a look at the fixed deposit rates at banks. So this is where you fix your money for a period of time, be it a year or 5 years. I was actually quite impressed with the interest rates I saw. First of all, the banks are all quite close. So you probably neither here nor there terribly. And some of the banks offer better rates, for example, if you're over 55 or if you open the account electronically. But I did sort of had a good look at all of them. Now, for example, if you were prepared to lock your money away for 5 years, that's the best rate you're going to get. African Bank and FNB top the tables on that. And they're going to pay out about 9.94%, nearly 10% from African Bank and 9.85% from FNB. That's the nominal interest rate that they all pay. But because you're leaving your money there for 5 years, your effective rate on maturity would be nearly 13%, about 12.8% or 12.66%, which is quite a nice return when you're taking very, very little risk, really, compared to perhaps investing in the market. And then if you only want to lock your money away for a year, for example, Time Bank is offering a phenomenal interest rate. I think that's 10.44%. And they're offering people who are putting their money away for 6 months a 10% annual rate. So some really, really interesting interest rates there. And if you don't want to lock your money away and you want it to be easily accessible, but you still want a good rate, then something like money market unit trust funds, those are really worth looking at. Things like Allen Gray and Coronation are offering rates of about 8.5%, and your money is available within 24 hours. So basically, cash is king at the moment. But I did notice, and I must just make one point, that the fixed deposit rates for 24 months are actually lower than 12 months, which kind of tells me the banks are expecting an interest rate cut next year. So locking in is maybe not a bad idea.
All right. Now, Maya, we were just talking about, and as you rightfully say, cash is king. And not to find yourself in a position where you overexpose yourself to personal loans or even a mortgage if you have kept your affordability threshold. In other words, even if you qualify for a car loan and all sorts of other things, be careful that if interest rates were to shift, go higher, etc., you're not finding yourself under pressure, even before considering investment. What are the building blocks before we get to enjoying, the boon of higher interest rates?
I think what's very important is you do need to have liquidity. So, you don't want to, obviously need to be settling your debt. And what's so interesting to me is I see people who have savings and investments sitting in, and they're saying, great, I'm going to get these returns, but then they've got debt. And remember, debt is always more expensive. No matter how much you're getting from the bank, you're going to be paying the bank more than you're receiving. So I think it's very important that we don't get caught up in saying, well, let me invest and get my 12% when you're paying maybe 20% on your debt. But there's also a fine line there for me as well, that you keep some liquidity. So you still you do still want to have some funds available to you, some money sitting in the bank that if there's an emergency you can access. So there's a balance. It's about having enough liquidity so that if life happens, you can access some cash easily, versus sitting with too much investments and when you've got a lot of debt to pay off. So I think it's very important to find that balance.
Yeah,
so I think that's
sorry, Maya, and the tools that are available. I'm just we're racing against time here. The tools available to calculate your interest rates offered, not only in terms of your savings, but just looking at a desktop approach to your finances. There's quite a number of them out there.
Absolutely. So, I mean, in terms of your interest rates, if you're wanting to look at interest rates, the banks have a lot of tools, really, really useful that you can have a look there. And, you know, also just understand your debt and look at the, you know, I'm not quite sure what tools you wanted to comment on here, but, you know, there are a lot of tools. Just have a look at the banks, you know, the bank's websites. They have a lot of calculators. I always go to those calculators to work out how much my interest would be if I'm borrowing money, if I'm depositing money, and I think that's probably a very good starting point.